All right, so let's take a look. This is Tuesday, October 31st. I'm going to do something a little different. I'm going to go through a review of the market recap, but I'm going to show you sort of how you should be thinking of one with how to plan, how to take your rules into account in trading, and then how the results ended up. So what do you do? So this is Monday. This is the beginning of the week. So planning for Tuesday. What do? You basically need to assess where your support resistance are in like within the previous day. So let's take a look. So right now you can see that these 30-minute candles could not close right there. What is that? That's also the low of Thursday of last week. So that's why that's super important. Um, and then you can also draw another line, possibly right here. That sort of like a zone. So if it ends up getting in the zone, it could consolidate. But if it breaks above, then there's not a lot above. So then below, you can see that this held really well. So then you can put another, say, line, here. This is, or I would almost draw where your zones are. So you see how this was a gap right here. They filled it partially, but you still have a gap. So I would draw that zone as a gap fill. So that makes it easy. Okay, there's your resistance. There's your support. If it breaks below, then you get downside. So with that said, what do? We also identify the end of the day what patterns. So at the end of the day, you can see that we consolidated and then we dropped below this pattern. So what does that tell me? That if we open up somewhere up here, I'm going to be using this as resistance, because anytime you have a consolidation and break, it's picked a side, it's picked a direction. So they'll maybe continue that into the next day. So my prediction would be basically getting short anywhere right here, and then if it ends up breaking above, then you go long, because then that's a failed break down on a consolidation pattern. So what would be your target? Your target would be down here. So that would be your zone right here. This is you're playing within the previous day's just zone. And then anyways, if you break below that, then it goes into a new area. So let's go ahead and let's see how the day progressed, or ended up trading. So you can see that this was considered a inside day, or a box play. You see boxed as in we opened within this range, and then sure enough, it did exactly that. It came up barely in the very beginning of the day, and then it dropped below the previous day's close. And then what do you target? So now you already know the direction. The direction is going to be down here. So within the 5, 10, like 15 minutes of the day, you can confidently get in and play this particular session. Multiple sessions or TPOs, 30-minute sessions. Then you can see that it was finding support. It was consolidating. This really had momentum, and it would have flushed hard through, but it didn't. So it was consolidating underneath this pivot, right? So now it broke above, and then what's your target? The next pivot. Okay, once it comes up here, what's your next pivot? And it's resistance until proven otherwise. So you short it. Comes down here. What do? Pivot again. It should hold this time. It already came above it, so that's support. You would have got in 5 minutes. You would have had another, what is that, 350 to 415. So almost 65-point move. So rule number one: watch your sizing. Beginning of the day, you could have gotten one contract, and one contract would have netted you, $1,200, right? Then next TPO, next time period, one contract, what would it net you? $1,200, $1,200, $1,200. It's just using one contract. So no need to size 3, 5, 10, on futures contracts unless your account, allows you to. Then, so the second rule, enter on a level. Okay, so you're entering right here. It's breaking below. You should be targeting to the downside. This is your target. Once it gets down there, you wait and see what happens. Yes, you might have missed out on some of this, but who cares? You've gotten the majority of the move, right? Let the period end, and then once the new period ended and you saw that it actually had a failed breakdown reversal. So failed breakdown, it's breaking below, but it's not holding, and now it's breaking back above. So it was now resistance, now support. And you see how it was support. So that would be enter near level. If you entered only in here and you waited for the bigger picture, if you entered anywhere like in here, you're in the middle, and it could have gone multiple ways. It could have came back down, 20, 30 points, down to VWAP and then gone up. I mean, you don't know what's going to happen. So this right here is a chase. You want to get in as close as you can, or you want to be identifying. If you saw that these wicks were coming up, that they were holding this as support. So any move down, you want to be getting to anticipate the long and then wait it out. This might have taken 15 minutes, but eventually it started making its move. And then the third rule is what's your timing. You see how these candles is a 30-minute candle? So you had new TPO. That new TPO is what actually shot this thing back up, and it retraced that entire candle. And then what ends up happening? New TPO. They came down. And this candle right here, you can see that right here there's a wick. There's a wick because it actually came down during that TPO, that new time period, and then shot back up. So that right there is telling you that this right here tells you this is bullish for the day. It should convince you. One, you need to remind yourself, well, where are we at in reference to the pivots? So this is a box play. Like the moment that this came back up into here, I already knew the day was going to be potentially box play or upside, mid-range play. But more likely, because it was the day before FOMC, it was going to be a box play. So it's easy. It's easy. I want to say it's easy. Trading is hard, but it's easy once you identify and have somewhat of a bias. You can sort of compartmentalize and know, where you need to have patience. And days like this, you have to have a lot of patience because you can see. Let's take a look at where the 12 o'clock period is. 12 o'clock period was right here. And you see all morning, this was the range. It was a pretty low range. So, it was that first hour and a half that gave you some really good moves, and then it was just a lot of chop. So that's what ends up happening on a box play day because you don't have a lot of range. You're stuck in between a couple pivots. So you can see that last 30 minutes before 12 o'clock, we broke above and we held, right? You could have waited right at 12 o'clock. You see how it came back down. It retested. So what's the rule? Know your timing is rule number 3. So where are we at? We know, okay, we're not making a new low at 9:30. So we're not going any lower, right? If we would have been making a new low at 9:30, that's the first hour. It should have came up here, rejected, and then came back down, and then that would have said we had potential more downside for the rest of the afternoon. But it didn't, so it held. So now you're in consolidation. Second timing rule is the 12 and 12:30 for afternoon play. So you can see that they ended the morning session higher. They broke the high of the morning, and then the afternoon session they held the pivot. And then what's your target within that 12:30? They then broke it out. So then that's a new 4-hour period. The afternoon session begins, and then what do? We go right into that other pivot. And so that was by 1 o'clock Central Time, and then we rejected it, and then came back up, and then we basically just chopped around the rest of the day. I mean, you don't want to be playing in this. If you see that we're not having a lot of momentum, the odds are the rest of the afternoon you're not going to be breaking out of here. And unless you're getting in here and taking a few points here and there, like don't expect big moves, and you don't want to be staring at a screen for, look at this, 5, 10, 15, 20, 25, 30, like 30 minutes. You see how small this range is? Man, imagine staring at the screen, just looking at these little ticks, it'll drive you insane. So that's it. I mean, you see how the plan worked. And look, what did we do? We broke above that previous day resistance, and we sort of held. Like, this never really, I mean, closed a little bit, but it came back above. And then look, what did it do? It came right up to that 14,502. Why did I say that? Remember, if you go over here, you see how right here, that was that resistance. So it would, now it's chopped in between. And unless it comes back below here, I'm assuming we may chop around here, but I'm looking at a 30-minute. Look to the left. I identified a channel. See how we're making lower highs, higher lows. It consolidated through here. It broke out. So we could come up here, then come back down here, you know, or that could be the high for the day, and this consolidates in here, and then FOMC. Oh, here you go. See, look, this is the morning session just opened. I'm recording this on Wednesday. You see how we just opened above that 506. So now we could shoot up here for the first 15-30 minutes, and then we could end up coming all the way back down here by morning and then chopping around. I don't expect us to be coming out of here. FOMC is today at 1:30, so they'll pick a direction. It'll either rip, you know, or they're probably gonna you know, have more continuation to the downside, because this is a potential bear flag. So, all right, good luck today.